This is episode 1108.
Fundamentally, why music rights are fantastic is that they have a 70-year protection post the death of the creator. And if there are multiple people in a band or there are multiple writers on a song, it's 70 years after the death of the last of those creators. And so you've got long life assets. Fantastic. Now, you have various contractual rights that sit underneath that about who owns the rights, what are the splits on the royalties, how much gets retained by the publisher or the label, how much gets paid out, how long those rights last for. And then on top of that, you have legislation within the US, for example, that allows artists and creators to get rights back. And so every acquisition, every deal that we do, we need to analyze what is the underlying IP rights, who owns them, how long do they own them for, are we buying them for the life of that copyright? And so, there is what I would almost call a hygiene factor that you must understand that to be able to properly value it.
Back in 2003, when a recruiter lined up Kent Hoskins to interview for a finance role at a music company, Hoskins was prepared to talk about guitar manufacturing. However, the executive immediately began quizzing him on music royalties. The recruiter had apparently misunderstood the brief. Hoskins didn't get the job at first. 2 days later, he was called back. A candidate had quit after only 24 hours. Hoskins stepped in. That twist marked a pivotal entry into the world of music IP, one that has shaped a 2-decade career, where Hoskins today occupies the CFO office at Concord, the largest independent global music company. You'll hear that and much more on today's episode. Our talk with CFO Kent Hoskins begins after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus dollars back to customers in business building rewards. Make every dollar count with Brex.
Hello, Kent Hoskins is with us. Kent is CFO of Concord, a leading independent music company based in Nashville. Concord would tell us they are the leading independent music company based in Nashville. Kent today oversees financial strategy across a globally scaled IP-driven business with a catalog of over 1.3 million songs. Kent, welcome.
Well, thank you very much for having me.
So, Kent, where we begin is by asking the guest to look back and go back in time, if you wouldn't mind. Identify some of those experiences you think were essential to helping you advance into the CFO office. What were those experiences?
Well, I'm going to go back quite a long way, actually, to begin with, which is I'm originally from New Zealand. And for those that know about New Zealand, it is an incredibly isolated country. It's in the South Pacific. That's about as far as you can go before you hit Antarctica. And it was described once in the 1960s as being the tyranny of distance. It is, very far away from anywhere, and it required those that lived in the country really to make do with what they had. For many years, it was so far away, they didn't have resources that other countries did. It instilled really a deep desire within the nation to travel. It has a sort of egalitarian mentality and mindset that says we want to succeed. There's a deep work ethic. And those attributes really make Kiwis, I think, highly successful internationally, both sport and business. And that sort of drove me really from quite a young age.
Was it always going to be numbers or finance? What was your mind? What was, in
Yeah,
college? Was it numbers already?
it's interesting, Jack. From a very young age, I kind of saw that as the path. And so it kind of leads me, some respect, into the second element of, I think, what sort of drove me to where I am, which is out of university, I joined, and I'll show my age here, Coopers and Lybrand before they became Price Waterhouse. In fact, I was there just as the merger. And I spent 3 years within the audit practice. And the office I was in, probably when you think about globally, it was a relatively small office, which meant that you got this broad experience working on multiple industries and businesses. And I worked on everything from the audits of hotels. You learnt about occupancy, average room rate, the importance of keeping both of those up. I worked in manufacturing businesses, agricultural. I mean, one of my clients was a very large fishing business where you received dry cleaning expenses because the office was working right next to the commercial fish processing plant. So you ended up at the end of it smelling like fish. But it really accelerated my knowledge about business, what worked, what didn't work, which I think is incredibly important as a base for how you grow within finance.
What city was that? Is that Auckland or?
It was Christchurch, which is in the South Island.
Later you got some perspective on how these offices were likely staffed or who populated them. Was it different from other parts of the world, just given the uniqueness of New Zealand?
I wouldn't necessarily say it was different in terms of sort of the mix of people. I mean, it was relatively global, and yet you had various people who moved to New Zealand for lifestyle. And so one business would have a British CFO, another one would potentially have an Indian CFO. So you did get a mix of experiences. But again, the mindset of how you operate globally, but locally. So one of the companies that we audited was called Tate Electronics. It made radio handsets that are used by police forces and around the world. But they did that, and they developed that technology from Christchurch. So they developed it from the other side of the world. And so, again, you learnt about how something that could be done locally could work globally.
When you do move beyond auditing, are you still in New Zealand, or are you already globe hopping?
No, so I loved my 3 years. I could not do 6-minute timesheets. It was inherent within me whereby I wanted to be able to affect change in organizations. And you can do that to an extent, but really you're more reactive in your reporting. And so once I became qualified, I left New Zealand and I came to the UK. And it's something of a rite of passage for New Zealanders and Australians and others who are part of the Commonwealth to do that. But I left really with a mindset that I probably was not going to come back, but that I was going to really work my way within business, within industry. And so, my focus primarily then was to move away from public accounting and move to something else. And in fact, my first job when I came to the UK was working for the BBC, the British Broadcasting Corporation, which again, it was 12 months and I loved, and it sort of started to give me this flavor of what business was like.
Was that an accounting role? What did you step into?
Yeah, it was exactly that. It was a controller of one of the divisions that owned the studios that operated, the outside broadcast equipment. And so the office itself was in the very center of the BBC. And in fact, all the studios were around. And as you came out and had lunch, you would see actors and various celebrities sort of walking past. So it was quite a change, but they had put in an SAP platform that as everyone knows, usually takes a number of years. They'd gone live, but they needed help in terms of reporting and getting the information out of SAP.
So this is where you spent your days.
Yes.
Tell us. It seems like you've arrived already, though, in the entertainment world. Anyway, do you look at it that way now? Did that allow you, because you've remained there largely in your career? The way
Yeah.
I look at it in a broad sense, is that
Yeah, you're quite right. I didn't see that at the time. It was only latterly that I realized I was moving into that space. And the reason being is I worked there for a year. I traveled around Europe and I came back in October 2001. So 1 month after September the 11th, people more generally were not employing. Everyone had shut the shop. They were waiting to see what was going to happen. And it was through discussions with recruiters that said, you know what, you've worked in the media space. We think there is an angle here, and put me forward then for a job at Boosey Hawkes, the classical music publisher.
is it a more senior role? What would you tell us about when you do make that change? Is it because of more responsibility? What is it
Yeah,
that
it was very much so. So
yeah.
Boosey Hawkes was at that time a publicly listed company on the UK Stock Exchange. And it had two divisions. One was manufacturing and one was music publishing, IP rights. And somewhat ironically, the recruiter had misunderstood the brief, had sent me into the interview and said, it's a manufacturing business. They make the guitars, for example, that Paul McCartney plays, the Hufner bass. And so I did all this research on manufacturing. I walked in, and the first question the person asked me is, what do I know about royalties? And I thought, well, that's not what I'm expecting. And again, I actually didn't get the job. Didn't get the job, but 2 days later, they rang me back and they said, someone started. They have lasted 24 hours. Would you like to come back in? And I went, absolutely. And Boosey had gone through an issue with the banking syndicate that they had. They'd blown some covenants, and it was all about to change. It was about to go through a public to private transaction, and I could see that there was great opportunity there. And so, again, it was working as a financial controller for the organization, more now a global role because they had offices in New York and Berlin. And I could just see that there was an opportunity that was coming.
At the same time, it's interesting that the industry is already known to be it's being disrupted. Yep. Already at that decade. So you're entering, and perhaps it presents greater challenges and opportunities for someone like yourself to step into an industry that's quickly changing.
Yeah, I mean, Boosey Hawkes is, I don't want to call it on the fringe, but as a classical music publisher, it is more about live performance, symphonic, ballet, opera, and the revenues that are generated from it. It was still going through change, but not to the same effect that the wide industry was with piracy. It was impacted by it, and you could see what was going to come even quite early. But this was a sort of a different end of the range of music at that time.
So what your relationship with this industry, this was formative. You were there for nearly 5 years. So I have to believe you begin to feel like you're part of this industry. I don't know.
No, it's exactly right. What is interesting is again, coming from PwC and seeing all these different industries and getting this experience, I knew I wanted to be involved in business. I didn't want to be just the pure numbers guy CFO. And there was change that was happening. It's an industry that pretty much everyone who works on it is highly passionate about music and the creative space. There is almost a sort of a love for the industry and a desire for it to be successful, which is a great environment as someone who works in finance or accounting to work in. And so I wanted to stay around. I wanted to understand what the next path was and what would happen. And because Boosey and Hawkes then went through public to private transaction, private equity came in, you had this period of change even within the classical side of the business.
The private equity relationship, perhaps this was something new to you. What impact did that have on you going forward, your mindset?
Uh, I'd say there are probably two or three things that really change what I was doing. So the first was in an organization like that, they're coming in because you have a story about how you're going to grow the business, and it's a growth mindset. What are you going to do to improve margins? What are you going to do to grow the business? And we had various ideas, the management team. It was then about how do you implement the plans? What can you do to affect change? And that's really important, again, from a CFO's perspective. It's not just the passive reporting, it is how are you empowering the organization and everyone else to make change. And then lastly, it's about delivering on all of that and continuing the momentum. Because organizations like generally periods of stability. They like to kind of come back to stability. And actually what you need to do is keep on pushing and pushing and pushing.
Are you also evolving yourself personally? The way storytelling becomes part of it as well as you speak more to management, as
Yep.
you talk to the private equity folks and explain some of what you see happening. Am I right about that? Yeah.
Oh, absolutely. I mean, you're into, as I say, the esoteric side of music as well. I mean,
Yeah.
you're talking about how a composer that wrote music in 1928 is suddenly now, that music is come back into the sphere and that people are suddenly performing it. And so you're telling someone why music is important, but even music that's old is important. And so you're right. There's a there is a storytelling element to it, and also a complexity that is required to try and cut through.
Well, I would imagine you enjoyed some advancement at Boosey and Hawks, but the next opportunity where you change jobs, what is it that leads you to do so?
So the exit of Boosey and Hawkes by the private equity firm
Oh.
was to a Dutch pension fund, of all things. And the pension fund had a thesis that long life assets, so intellectual property, long life assets, would nicely match the liabilities that they have within the pension fund. And so this thesis had rolled into an investment in pop music rights initially. And the pop music rights that this fund had bought didn't have a platform ready to run it. They just bought the IP. And so Boosey and Hawkes came along and we said to them, look, classical has long life assets. This is perfect for you. We have a platform. We can then take in this catalog and we can help you to grow it. And so for the next period then of ownership was within the Dutch National Pension Fund, that was APG. And we took in this new catalog and then we went off to buy more rights. So the thesis began to hold. You could see that, back to your point about the industry changing, it had gone through this area, this time of piracy, but the underlying performance of copyrights was still strong, especially catalog copyrights. And so we went through a process. We bought Rodgers and Hammerstein. This was the family business, both all the musical rights that they had, all the publishing rights. Both Rodgers and Hammerstein were extraordinary about retaining ownership of rights, and they saw it back in the 1950s. So we bought Rodgers and Hammerstein, and then we also bought some pop rights. We bought some rights from Phil Collins, and we scaled the business.
So And is it rebranded at that place in time, or what
Yeah, so
happened?
they created a name called Imachem, which is, Dutch and maybe not the easiest to say, but if Imagine was effectively the name of the business,
Yeah.
and so we operated as that, still with a footprint in the US, in Europe, and in the UK, and again we grew that business very successfully.
Are you during this time? I mean, are you emerging as a senior finance executive and future leader, or how did you think of yourself?
Yeah, so my predecessor, who in the UK is a finance director other than the CFO, he decided it was the right time for him to leave and try other opportunities. There were fund managers that sat in the Netherlands, but they needed really an operational finance director slash CFO that would be heavily involved in making sure that all the copyrights were registered, how we integrated, how we operated the business. And so I stepped up at that point, and became effectively a sort of a deputy CFO, for want of a better description, working with the fund, and working on then acquisitions, working on integrations. And so I love that period of being heavily within the operations and reporting.
It's funny. It's a interesting industry in the respect that I think it has this sort of glamorous side to it, the fact that so many creatives and artists are involved in it. And then it has this very wonkish IP side of it where you spend a lot of time with attorneys. Um, right? Am I right? I mean, you must become an IP expert in a certain respect as well, or know all the trip lines of the IP world in part. Am I overstating that, or?
No, you're absolutely right. There, fundamentally, why music rights are fantastic is that they have a 70-year protection post the death of the creator. And if there are multiple people in a band or there are multiple writers on a song, it's 70 years after the death of the last of those creators.
Wow, didn't know that.
And so you've got long life assets. Fantastic. Now, you have various contractual rights that sit underneath that, about who owns the rights, what are the splits on the royalties, how much gets retained by the publisher or the label, how much gets paid out, how long those rights last for. And then on top of that, you have legislation within the US, for example, that allows artists and creators to get rights back. And so every acquisition, every deal that we do, we need to analyze what is the underlying IP rights, who owns them, how long do they own them for, are we buying them for the life of that copyright? And so, there is what I would almost call a hygiene factor, that you must understand that to be able to properly value it.
And that's interesting. Just from through the financial lens, this is really becomes a very, I think, more specialized industry than some because of all of what you need to stay abreast of, and in what continues to evolve with laws and what have you in different parts of the world.
No, you're absolutely right. I mean, and through all of that, you had this transformation.
Yeah.
So music historically was a one-time sale. When you think about physical formats, when you think about vinyl, tape, CD, it was largely a one-time sale. And what the industry tried to do is make you buy it again. You either bought it on a new format, or they put out a greatest hits, or they put out a new album that had 3 new songs, but largely the songs that you already own. What happened through the transition to digital was the model moved from one-time transaction consumption to subscription. And what that did is you had this dip through piracy and then it came back up, but it transformed it into a recurring revenue stream. So you got long life assets, and now you have a recurring revenue stream, and you have subscription models where you've got price increases. You get more penetration as subscription rolls out globally. So through all of this time, you also had this transition within the industry.
From a finance perspective, the finance function's role in a business such as this, can you help us better understand how it might have more responsibilities or different responsibilities than other industries?
Yeah, certainly when we were a smaller business, finance then had responsibility for copyrights. So the copyright department's the one that goes and registers everything and makes sure that the data is out correctly. We had responsibility for royalty processing. So this is revenues come in, you're putting it through a system that is then calculating what is owed to whom. And so that for a while fell under my remit. And so, as you quite rightly say, it's not only just reporting, it is how do you operate a business? How do you do it successfully? You quickly get known. If you don't pay the right people on the right time, that's an issue within our industry. And so you have to continue and ensure that you're delivering on what the contracts say. And so there was a large element of that. And then you talk about M&A, you're then doing not only the modeling of what we're trying to buy, you're trying to understand, as we've discussed, the longevity of the rights. Who owns them? How long are we going to own them if we buy them?
As you emerge as a leader in finance, and I think imagine you become sort of the global head of finance.
Yeah.
Other CFO opportunities. Did you ever consider leaving the music industry, or had it really become your home at that point?
I strayed once or twice, shall I say, looking at other opportunities. And one was another private equity-backed business that was sort of, again, within the media space, where through connections with the private equity firm that we had been working with, someone tapped me on the shoulder and said, would you be interested? I went and talked to them. What was interesting for that is I just couldn't see the strategic opportunity that the private equity house did. And in fact, they sold the business 3 years after for a loss. So I'm glad I did not make the move. The second one I went for, and this was around the time that Boosey Hawkes was sold, was a consultancy business that worked heavily within the media space. And it was rather distasteful because the principals from this firm said to me, oh, I see you've worked at Boosey Hawkes. Oh, we managed to rip them off for years. And I went, oh, that's great. Thank you very much for the opportunity. I'm going to stay where I am. And I'm very glad I did. So on a couple of occasions, yes, but it never really tempted me away.
So initially when you at some point joined Concord, and I don't know if there was an acquisition involved that brought you
It was exactly that.
Oh, it was?
Yeah. So Markham's ownership had run for about 10 years, which, for a fund and others to own rights, that's quite a period of time. Mm-hmm. And so this is 2017. Concord had a similar thesis that underlying cash flows from copyrights were strong, long life assets, let's invest in them. Mm-hmm. And Steve Smith on one side, who is our chairman, and continues to be our chairman, invested from the mid-2000s. And on the other side, a fund called GMP now, Alex Thompson, John Rotolo, they had come together, both with the same thesis, and were growing substantially. And so Concord acquired a Markham in 2017, and I came across with that acquisition. Now, I had an expectation that probably what would happen is that a large proportion of the employees would be cut, but their actual strategy was the opposite. Is that they believed that this migration to streaming was about to hit and that we needed to lean into it, and that really the people that worked in this business were the right people to help them grow. And so most of us then stayed.
And I want to just point out, you step into what I would call is a a CFO unit role, or
Yeah.
however you want, a business
Yeah, it was
unit,
exactly that.
and then
Yeah.
you advance into the CFO role, I guess, in 2021. Is that correct?
That's right. And so the business had grown substantially. It decided to create a platform that had sort of three verticals, for want of a better description. So within music, you have music publishing rights. So this is the writer. The publishing right then is associated with the writer,
Yeah.
and that writer can work on a song, and it can be, multiple artists can put that song out, but they always have an interest in it. Second, you have the recording, underlying master recording, the recorded music division. So you have a publishing division, you have a recorded music division, and then with Rodgers and Hammerstein, with the musicals, they then created a third, which was a theatrical licensing division. And so my initial role was ahead on in terms of CFO of both the publishing and the theatricals divisions at a time when there was substantial growth through acquisition.
For those unfamiliar with Concord, how do you introduce this company today to people when you talk about it? What is it? Tell us about it
Yeah.
broadly now.
So Concord, I mean, I think you briefly touched on it. It's the largest independent global music company. And it is a music company. We have 700 employees globally, and we operate a very large catalog business, but we have a frontline business. We actively sign artists and writers, but the catalog has everything, as I say, from Boosey Hawkes, which is 20th century classical music. It obviously has the mid-century musicals with Rodgers and Hammerstein, and it has 60s, 70s, 80s, 90s, 2000s catalog music. And it has grown substantially to the point that we'll probably do over 900 million of revenue this year. We're targeting $1 billion next year.
Finance folks are fond of using the expression creating value. How does this Concord's business model create value across, that catalog you mentioned and these other offerings?
The first thing we look at when we look at rights and rights acquisition is what does it provide to the organization that we don't already have? Or what does it add to something that we already have? And so we frequently look at acquisitions that we think maybe have been underexploited. Back to the hygiene factor that I talked about before, have they been properly registered? And we bought about 7 years ago a regional Mexican catalog of music, both the masters, the recording side, and publishing, where a number of the songs weren't even up with DSPs, weren't up with Apple or Spotify. And so we could see an opportunity to create value there. We have a team called Craft. There's a couple of these albums behind me. What Craft does is they take catalog and they say, wouldn't it be great if we remastered and reissued? And so they are out there looking at what we have in this catalog and working to reissue those rights, the underlying recordings, back to the market, which then, of course, you get more engagement from the fans. Okay, you get maybe another vinyl sale, but you also get the step up in revenue through just generation of people that are coming back to the music that they once loved.
I saw the number, and correct me if it's not accurate today, but something like 125,000 artists and writers are under the Concord umbrella. And I wanted to, how do you structure finance to sort of serve both the scale that you're sharing with us, the vision, and this sort of personalization?
So when you think about music historically, the way it was funded was either through simple equity or debt funded, but debt funding was generally at low LTVs, loan to value ratios, of somewhere on 30 to 35%. And it was difficult to raise financing outside of a group of probably 4 or 5 banks, if I'm being honest. But as streaming came online, as companies went onto the public markets and analysts did more deep dives into the operating model, people became comfortable with the recurring nature of the music, the revenues, the long life, as I keep saying. And so what we did 3 years ago is we went to the asset-backed securitization market. And we said, look, bondholders, this should be a perfect investment for you. The thesis holds so perfectly. And so we went out with the largest asset-backed securitization within the music space, $1.8 billion. Now, what that gives us is a relatively low cost of debt when you compare it to, say, a revolving credit facility or something like that. You can increase the leverage. Now, we personally as a company don't really like to go above 50%, but others in the market now have gone up to 65% leverage. And so you're utilizing debt markets and debt markets' knowledge of music in a way that's helped us to grow.
I'm wondering, you've talked about acquiring music catalogs for growth, and this approach to M&A, this approach to valuation during M&A, can you be interested in learning how you go about valuating music catalogs, something in general that most people might not think about?
So when you think about music, I mean, it's a discounted cash flow ultimately, right? Most investments that businesses make are using DCF models, and we're not different. So you're looking at historical reference points of how catalogs or music have performed. You're making assumptions of growth on a go-forward basis. You're thinking about, and the way we model it is a 10-year horizon. Yeah. We have shareholders that are looking for the long term, so we look for a 10-year discounted cash flow and a terminal value multiple. And the levers that drive within that are then, what are we going to do with the music? Are we going to reissue? Do we believe that we can clean this up and grow it? What is the industry doing? What's the industry growth looking like? And that's been interesting because the market, if you look back 6 to 7 years, was growing by mid-teen growth annually. That's now come down a bit as subscription penetration, certainly in Western markets, has started to level out. But it's very much driven by what do we think we can do with this music. And frequently we will pass. We've looked at some acquisitions that have been of very major catalogs where we've gone, you know what? The previous owner has done such a fantastic job. We don't think we can do more with it. We'd love to have it, but that becomes ego. That's not about creating value. And so we pass.
Would love to know how, when you think about organizing the finance team, and again, you've been in this industry, perhaps it's done a little differently, or perhaps your priorities might differ. Can you share with us, when it comes to the finance organization, what things look like inside Concord?
Well, I mean, it's probably more traditionally structured than you would think. So we have a corporate team that does all the banking work. It does all the consolidations and the reporting. Very traditional. Yeah. Within each of the divisions, then, it is a little different. So I still have the structure of CFOs that run within each of the divisions. And they become specialists within each of those divisions in terms of the rights that division owns. Right. And each division has a slightly different structure depending on the way it operates. The theatrical side of the business is a licensing business. It's about 80% is just pure licensing direct to the client. And so for them, it's far more about the volume, about licensing, about collections. On the music publishing side, the way that collections are structured globally is that there are local societies that operate in each territory that do collections. We do direct licensing as well. but you need people on the ground in territories that are then having that relationship with the society and collecting. So for them, it's more a geographical structure rather than, say, within theatricals, which is a licensing structure. And so it's about how do you optimize each of those divisions to make sure that they are successfully understanding their business and reporting on it.
We always like to ask about your visibility into the business, and I was thinking about how one of your first roles, how you had to go help the company get the information out and visible. And clearly technology's become a lot more sophisticated over time. But tell us something about your visibility into the business, and if you wouldn't mind, reflect a little bit on how technology has either helped you or, again, back in time, SAP was both a blessing and perhaps a time
yes, curse.
consumer. Yeah.
Yeah. We went through an ERP implementation that started in 2018, launched perfect timing in about middle of 2020 through COVID. And it was because the business had grown so quickly and had all these multiple systems that operated globally that we needed to get to one ERP.
Yeah.
And what was interesting through that process, and certainly what I learned, is that we brought in external consultants that helped us with it. And we knew what we wanted in terms of data structures. We knew what we wanted in terms of an ability to report by the underlying assets. But we really struggled at a certain point. And the lesson learned was that you cannot just assume as CFO that you can run a diktat that says, this is what we're going to do, here are your consultants, go and build it, and then for it to work. And so we had to change tack. We ended up bringing in-house resource, specific ERP, and we put in NetSuite, Oracle NetSuite, cloud-based software with effectively a Cognos data set that sat on top of it. And we had struggled for a period of time. We brought it in-house. I empowered the team to then run directly with this resource in a way that now the reporting that we get out is quite amazing. On the recorded side of our business, we can tell how an album has performed, how a track has performed by territory, by Apple, by Spotify, by the distributor, by the source, down to that level. We can run income statements by artists. How has an artist performed? How has the artist's album performed?
Yeah.
So you can slice and dice this data. But the learning through the process is that you really do need to get your hands dirty. You need a team that's empowered to do it, and you need people that can deliver on it. I mean, it sounds almost sort of facile. You think, well, every project should run like that. But you think when you bring in people that tell you they know what they're doing, that you can rely on them. Sometimes I'm afraid that's not right.
Yeah. From a KPI standpoint, we'd be curious as to what are the top of mind metrics for you. I mean, what is when you step into the FP&A conference room with your team? What do they think you're going to ask them about?
So it is back to those performances of how has a writer performed? We sign a writer. We've given them an advance. What cuts have they got? How have each of those songs performed? And this idea of running income statements by deal is really important to us. And it's important to us when you think about capital and how you allocate capital across our business. So we can buy rights, but we can also build rights through signing writer and artist deals. And what's really important and what we're focusing on quite heavily at the moment is, do you deploy more capital to build rather than to buy? And it's not easy because you can deploy capital, but are you deploying it in the right way? You can throw money at the wall and hope it sticks, but how is it operating? And so a lot of my time at the moment in terms of reviewing performance is how is the capital we're deploying within this frontline business, new release business, how is it performing?
Oh, very interesting. We want to quickly just touch on AI with you. And it's interesting, like streaming is one factor, but AI is another potential risk and disruption. And wondering how you're assessing some of the risks there that generative AI may pose to the integrity, I guess, and value of the catalog.
Well, I mean, starting from the point about AI, a lot of businesses are looking at it as a way of cutting cost.
Yeah.
Can you bring in AI and it will replace functions that are operating? Within the music industry, I think AI has an opportunity to reduce the cost of collection. It has an ability to map song usages globally, tell you which album it relates to, who owns it, and get it paid properly. So collection has been at best clunky globally within the industry, and AI is improving that. So that I think is going to help. AI is also being used though to manipulate streaming services through fraud. It's people putting music up on streaming services and then using bots to run streams 24 hours a day.
Yeah.
And that is devaluing the amount of revenue that then goes to creators and artists and the industry itself. AI is really good at seeing AI.
Yeah.
So what they're using now is AI. It sounds like the script from the Terminator, but it's using AI to identify where things are not right and then eliminating them. So again, that's on the plus side. Now you raise the point then about generative AI. And what the large AI companies are saying is, look, if we don't machine learn on all of the music and create music, if we don't do it, someone else will do it. The Chinese will do it. And that's a sort of Hobson's choice in my mind. Like that can't be right. We believe that there will be licensing models that could work for everybody, both the AI companies and for us. And that if it runs unfettered, you run this risk, I think, of fans of music losing what is a tangible connection with artists out there. Yeah. You know, the fact that people have listened so massively to Taylor Swift is because there's an emotional connection there. You're not going to have an emotional connection to a computer-created song. It may sound great. How do you go and watch it at a music venue? How do you learn about the fact that the artist has just broken up with their boyfriend for the third time? You don't have any of that connection. And I think that's the risk. And I think the AI companies are using this idea of fair use, the sort of doctrine, as rationale for why they should do it. I think it's wrong. I think it's going to impact creators in a way that is really bad for both the creators and for the fans. But I think we can create licensing models that will work.
I would think it is, but is Concord involved in, say, industry-wide conversations or regarding policy efforts here?
Look, there's a mix of what I would say is policy, and then there's enforcement. Yeah. So we're working on both sides. So on the enforcement side, we have been working with the other major companies on lawsuits against some of these businesses that have not licensed. We're actively engaged on the advocacy side around this. And music is one of the few businesses that both left and right of the political spectrum actually come together on, because everyone likes music. Doesn't matter who you are, whether you're left or right. And so there is political will, I think, to sort this out. Now, the difficulty, of course, is that the large AI companies have tremendous money in terms of lobbying. And so it's hard to compete against that. But I think we will and will continue to fight for our creators to make sure that this works.
Just want to circle back to your finance lens now. Do you see AI having a role in your forecasting function? Is that the future? Or?
Yeah, quite possibly. we use decay models and growth models on our music when we look at budgeting and forecasting. And more, you can use AI to help you with that. And you can use it even in the short term because you see consumption. So you can see really early what people are listening to. So for example, we have the Creed catalog. Creed, big late 90s rock band, went out of popularity, but you could see a couple of years ago that it was coming back. Yeah. And you could see it from the consumption. And so we knew that that revenue was going to increase over the period of the next 12 months. And so we put marketing efforts into the band on the back of what we could see with consumption. So you can use consumption data and you can use AI to take all this together and help you build forecasts.
What comes to mind for you when I ask for a finance strategic move?
So when I joined Boosey Hawkes, this is back in late 2001, 2002. It was going through these struggles. And the CEO could see part of the issue within the organization, which was that 50% of the revenue of the business was generated from physical sheet music. So choirs who perform buy sheet music. People who rehearse, people who perform music buy sheet music. And it was making up 50% of our revenue. It was probably 70% of the company's focus. We had a warehouse. We had a buying team. How much sheet music should you print of this choral score? It was the first section of our income statement. It was probably the largest management time suck of anything that we did in the organization. It made us 15% of EBITDA. So we spent all this time and all this management effort. And the CEO at the time said to me, look, Kent, and it's a cliche, but I'm going to say it anyway, revenue is vanity. EBITDA is sanity and cash flow is reality. And it absolutely sunk into me when we went through then a period of restructuring. We licensed sheet music to a third party. We probably lost 30% of our headcount, which was sad but needed to be done. The focus changed to then intellectual property, exploitation of rights. And the profit margin increased, our revenues increased, because we were then focused on the right part of the business. And it keeps coming back to me when you look and you analyze how businesses operate, that all too often, if there's not a path to profitability from revenue, why are you doing it? What's the rationale? And so it really stayed with me all through my career since then, that you do have to consistently analyze and refocus on what you do.
Kent, we are going to jump into what we like to refer to as our mentoring round. This is where we're going to ask you to stay back there in time. Actually, I want to point out, I mean, your career is actually, it's almost as if you joined a single company over time, and you're
That's right.
You've been there for 20 something years. Yeah, remarkable. We didn't mention, when you came to the States, I think might be an interesting chapter. And I know, was that involved with, Concord and entering the CFO office, or can you take us back and share with us that chapter?
Yeah, so Concord as a business had probably 100 different shareholders going back in time to about 2018. And the Michigan State Retirement System pension fund had decided that they were going to be long in IP. And so they bought out virtually all these other shareholders, left management in, but effectively became above 90% owner of the business. And at the time, they said, look, a lot of you have been in this business since the mid 2000s. We need succession planning. You need to tell us what's going to happen within the business over the next 3 to 4 years, and we're going to plan for it now. Which was, I think, very wise on their part. And what that meant was there was visibility on what was going to happen. And so my predecessor CFO, Bob Valentine, is now CEO. And so he touched me on the shoulder one day and said, Ken, what do you think about CFO? And I went, that's great. I'm loving my CFO role. And he went, no, you don't understand. What do you think about being CFO of the company? Would you be willing to move to the US? And being something of a nomad, having left New Zealand, and I worked in New York for a year in 2006. I jumped at it. I said, I'm not sure my wife will jump at it, but let me talk to her and I'll come back to you. But that succession planning meant that we could build in the move in a way that really worked and allowed me time to get up to the role and then him up to the CEO role. And so the mentoring really helped. The board was incredibly supportive. And so it made the move a hell of a lot easier because I knew the people that were there. I knew the structures. We did make some changes, but broadly it was already in place. So it made my life a lot easier.
Yeah. Well, thank you for that. We always like to ask our guests to reflect a little on the personal side, Kent. You're a world traveler, no doubt. But what else, something about you that maybe most people might not know? Again, you grew up on the other side of the world.
Yeah. Interestingly, I said I lived in New York for a year. In fact, I met my wife. So my wife's English, but I met my wife in New York. And so when you say to people, I'm a New Zealander, my wife's English, but we both met in New York, people go, what? And so we met. I was working there. She happened to be out on business. And so we had the long-term relationship for about 12 months. And then I moved back to the UK.
Yeah. And today you're both expats then.
Exactly right.
Yeah. All right. What about, we always like to ask for a resource or a book or something that's influenced your thinking over time, or it could be something you just escape with, Kent. We're easy.
You said to me, very early, did you know you wanted to be in accounting? I knew I wanted to be in business. And I read, probably old for my age, but I read Lee Iacocca's autobiography. For those that don't know, Lee Iacocca was nowhere near the top of his grad school. He went to Ford. He got very close with the Ford family. He released the Mustang. He had incredible success. Politics within the family forced him out. He then went to Chrysler and basically turned the business around. So he had these periods of amazing success. And I remember reading this in the early 90s. So I wasn't actually that old.
Yeah.
And just thinking, my God, that's amazing. I if I could do 1/10 of what that man has done, I would be so happy. And so for me, it was that autobiography. It wasn't a finance help book. It wasn't anything around that. It was more about the personality of the man.
That's really interesting. We haven't had that recommended before, and yet it was such a big bestseller way back when. And he was such a celebrity.
Indeed.
Back when.
Yeah.
So great. Thank you for recalling that for us. We are up to our final question. We ask you to look forward finally, and we'd like to know your priorities for the coming 12 months.
So Concord in the last 3 months has made 2 operating acquisitions, operating businesses, not just catalogs, but operating businesses. Yeah. And so the primary focus for us is integrating those businesses, getting them working as they should within the wider Concord environment. And it's going to take time. There are people involved. There's going to be some restructuring. And so that's probably primary focus. We talked a little bit about debt. Yep. We have both this ABS debt on one side, and we have a revolving credit warehouse facility. We're going to go through, amend and extend the warehouse facility. Right in the process of doing that. I did a lender call last week on it. And we have the potential to do a refi on some of the tranches of our ABS, where I think we can also look to drive down the cost of debt. And so for me, that's probably the primary focus over the next 12 months is both of those, operational and it's debt.
Kent Hoskins, thank you for joining us on CFO Thought Leader.
Thank you so much, Jack.